Okay, well, those are the headlines. But of course, the big story on the Money Show is the Franklin Templeton case. SEBI on Monday barred Franklin Templeton from launching any new debt schemes for the next 2 years. Also imposed a penalty of around 5 crore rupees for violating regulatory norms in the case of the winding up of those 6 debt schemes last year, and also has asked that Franklin refund the investment management and advisory fees of more than 500 crore rupees collected with respect to the 6 debt schemes. This amount will obviously be used to repay unit holders. Let's understand this case a little more. I have with me Sandeep Parekh, founder of Finsec Law Advisors. Sandeep, thanks so much for joining us today on the Money Show. To start with, let's understand, your understanding of this entire ruling from SEBI, the fact that Franklin has been asked to completely refund all the management fees that it may have taken from that it obviously has taken from the debt fund holders. Have you seen something like this happen before? And in a way it makes sense, right, that you haven't performed as you should have, and as is your responsibility towards your investment to your unit holders. So now it's your duty to refund it. Is this a precedent of sort that has been set?
Yes, please. So I think, yes, this is the first order of its type. So it's the first time SEBI has asked a mutual fund to kind of refund the money that it had earned out of management fees, essentially saying that you have not managed, you have mismanaged the funds, and therefore, to the extent of the 6 schemes, again, there's not a penal order. They're saying that you just give back the fees because you're not done your job as a fund manager. So it's definitely a very interesting order, and I presume that this will kind of hold up in a court of law. But of course, the Franklin AMC guys will of course fight it out at SAT, and so this is going to be fought for many years from now. But it does make kind of sense on first principles.
Do you see this sort of egging other aggrieved unit holders as well, knocking the doors of the SEBI, saying that, I believe that the fund manager has, not performed to a certain level, and do you think it could open the doors for more even qualitative performance measures which unit holders may complain about their fund manager not meeting their expectations, etc.? Do you think that this is sort of opening up a Pandora's box as well? It could egg other unit holders on as well to do the same?
Not necessarily. So see, for the sake of simplicity, a mutual fund investor really bears all the risk, whether it's credit risk, duration risk, interest rates. A case like this is really in very extreme situations where there's kind of a very clear set of actions which are perceived to be kind of complete, is the difference between negligence and rashness, right? So if you drive a little bit faster than normal and you have an auto accident, that may be negligence. And typically, if there's some kind of a action for, let's say, injury to a person on the road, a person who's negligent gets away 9 out of 10 cases, whereas a person who is rash, who's essentially kind of deliberately drive really fast in a crowded place, does not get that same kind of treatment. So I think the differences of degree, it's not of nuance or of understanding, but only, if you really mismanage things, you could face a similar order from SEBI, but it won't be merely because performance is not up to expectation. It'll have to be a lot more than just below market performance. So my guess is it's not something which will be used very frequently by. If it does get upheld by SAT and or Supreme Court, you will have SEBI using this kind of power more frequently. And as I said, this is the first time SEBI has done this ever. So it's an interesting use of the power is what I'd like to say.
Well, so if you're, a mutual fund holder and you're not happy with, the way your mutual fund is performing, it does not mean that you can drag your mutual fund manager to the doors of SEBI. This is, a totally different circumstance. Remember, the ultimate risk associated with investing in mutual funds is something that you as the investor have to bear. Of course, there are cases of mismanagement, as SEBI has alleged in the Franklin case, which is why this power has been exercised. And like Sandeep says, it's an interesting exercise of the power, the refund of the fees that they had collected from unit holders. So what exactly is the mismanagement that Franklin has committed according to SEBI, Sandeep, that has caused them to exercise this power? What are the list of allegations, violations that SEBI has listed Franklin has committed?
So again, it's a long order, so I don't want to summarize the whole thing. But broadly, they've said that they've invested in the wrong asset classes. In addition, something which was also mentioned in the order is with respect to front running by some senior people. I think that also had, though it's not directly relevant to passing the order against the MC, but I think it kind of muddies the waters. Was the fact that several senior people exited their investments in some of these schemes just before it became public, and when they were privy to. So something akin to insider trading. So that would also kind of have played its role in SEBI's head when they passed this order. But broadly, SEBI is saying that you have kind of mismanaged the funds by investing in the wrong place, with the wrong maturity, with the wrong duration. And, you went up the yield curve when these schemes are marketed as rather safe investment vehicles. So that's kind of, in two sentences, that's the charge of SEBI.
Sandeep, I think all the stakeholders have learned a lot of lessons. There have been a lot of takeaways from this entire Franklin fiasco. It's been, more than a year now. And SEBI as well has mandated lots of different disclosures that the mutual fund industry has to adhere to. One of them was something relating to what you said, the mismatch between duration and the papers held, about how credit risk and duration really did not go hand in hand. Many debt funds were holding riskier paper in shorter duration funds as well. So if you could just wrap up, how has SEBI made certain kinds of disclosures mandatory for debt funds, which make it easier for investors as well to identify how much risk their debt fund is really carrying?
So I think lots of things have happened in the past, let's say 6 months with respect to disclosures, starting with the changes in the riskometer, which is, it's kind of a simple meter which shows, which is a pointer which shows, categories of risk. Change become on once. There are kind of new indicators with respect to duration risk and credit risk is segregated into two separate buckets. Lots of new disclosures. And again, when we say disclosure, it's not the 500-page document that we often associate with the prospectus. It's more to do with stuff like the riskometer, which is easy to read, easy to understand. So I think SEBI's focus has been more and more on the aspect of an investor seeing that 1 or 2 page and kind of figuring out that this is a product appropriate for me or not.
Okay. Well, Sandeep, it was great having you with us. Thanks so much for joining us today and making sense of this entire case. One important thing that Sandeep has said, of course, right in the first answer is that yes, while SEBI has said that Franklin will have to refund a total amount aggregating 500 crore rupees to all of the debt fund holders, which it has collected as management fees, it's important to understand that this is not something that will be credited to your account by tomorrow, day after, or next week, because there are still many more legal processes that Franklin will for sure go to. Now that SEBI has passed this order, they will will in all likelihood, in fact they have said they will do that, they will approach the SAT, the Securities Appellate Tribunal. So it's still perhaps going to be a couple of years until you see your management fees. But yeah, like Sandeep said, and this is the first time ever that SEBI has exercised its power and asked a mutual fund to refund the management fees that it has collected for its certain funds. In this case, the 6 debt funds that have been wound out.